it's finally cool enough down here in North Carolina to wear long pants again. So I actually do have the Bitcoin orange pants, and I have the Bitcoin roller coaster sock game. Well, why the Bitcoin roller coaster? Because it's summer, and you do roller coasters in the summer, but also in the last month, since July 10th, we've basically been at the same place. We've had some highs and some lows, but we're in this because a roller coaster, right? You go up and then you come down and then you go up, but you end up in the same place. And but the enthusiasm for me is coming from, I think we're about to enter the lock-in track.
Bitcoin's latest flash crash has stirred up intense debate, and many are pointing fingers at Bitcoin's oldest wheels. On Sunday, the price of Bitcoin suddenly dropped over 2% in under 10 minutes, wiping out billions in market value. According to analyst Willy Woo, these OG whales, who first accumulated Bitcoin back in 2011 at prices around $10, are now having an outsized impact on today's market. He explained that it takes over $110,000 of fresh capital just to absorb every Bitcoin they decide to sell, making the climb for BTC much tougher this cycle. The most recent sell-off was reportedly triggered by a massive whale rotation from Bitcoin into Ether. Over the last week, one whale offloaded more than $2 billion worth of BTC, sending 24,000 coins to the decentralized platform Hyperliquid. Much of that was swapped for ETH, sparking a cascade of sell orders that briefly pushed Bitcoin below $112,200 and dragged Ethereum down 4% in minutes. While both assets have since recovered some losses, the move shows how much power these whales still hold. What makes the situation even striking is the strategy behind the whales' actions. Not only did they rotate Bitcoin into ETH, but they also staked hundreds of thousands of Ether and opened huge long positions on Hyperliquid. By front-running market reactions, this trader pocketed an estimated $185 million in profit from the Ether BTC swing. As analysts warn, with over 150,000 BTC still sitting in the whales' wallets, more turbulence could be ahead. For now, investors are left wondering just how long OG whales will keep shaping Bitcoin's painful rise.
Right? Where you lock in, you're going up the big hill. And I think we're going to see that come the fall, because I'm wearing a little bit of maize for you for, football season coming up. And in fact, I got a lot of, like our partner Sachin would say, I'm wearing Florida colors with the orange and blue, his Gators. But I guess I need to wear the darker blue for my Irish. But and now some would say, but wait a minute, Mark, you just said that it goes up and goes down, and if it's the roller coaster, well, what if we go in this big track, between now and October, November, then what? Well, yeah, then I actually think we're due for another bear market. Now, interesting, Saylor this week abolished winter. He said winter is not coming back, that, he basically decreed that the 4-year cycle is over. He's a smart guy. I'm taking the other side of that. I've been talking about this really since January, and I said it would be unpopular. Everybody wants the 4-year cycle to be eradicated. Everybody wants to believe that the ETFs and the institutional demand have eradicated the, humans are going to human. If I own an asset on blockchain, I don't need the bank's permission. I don't need the government's position. I don't need anyone's permission to move it to you or to my, my son or anybody else. My son came in today, and so I had a call this morning, so he had to walk home from cross-country practice. He's like, I demand compensation. They're like, well, no, it's good for you to get a little exercise.
Or extra practice,
Yeah, extra practice. But if I did want to compensate him, I can, punch a couple buttons. I don't need to ask the bank's permission to say, should I be allowed to give some of my money to my son? And that's a better system. And so we're on the precipice of truly landmark evolution in, as you said very correctly, governance of value dissemination and control. And that's a really cool place to be, as long as you're not dependent on the rents of the old system. If you happen to be dependent on the rents of the old system, bank, broker, insurance company, custody agent, you don't like it very much because, I just use a simple example, stablecoin, right? If I, sitting on my couch in my pajamas on Sunday morning and I want to buy something, if I want to use fiat, I got to wait for the bank to open, or I got to use a credit card and pay somebody 3%. With a stablecoin, I can do it instantaneously, basically for free. I mean, it's not quite free, but it's, essentially free. And that's just a better system. And will it always be hegemonically backed by dollars? Probably not. But in the short run, this is certainly a way for the U.S. to solve one of their greatest problems: who's going to buy all the debt?
Right.
XRP has been struggling to push past the $3 psychological barrier, leaving traders eager to know whether a breakout is still possible. After peaking near $3.66 in July, XRP has slipped more than 20%, with a fresh 4% drop in the last 24 hours, dragging it back below $3. Despite the pullback, many analysts remain optimistic that a bigger move is on the horizon as long as XRP can defend its $2.95 support zone. The $2.95 level is critical because it once acted as resistance in mid-2021 before flipping into strong support earlier this year. Analysts like Avi Harkishin believe that if this zone holds, XRP could rebound toward $4.44, with the Fibonacci retracement levels also pointing to a technical upside target around $4.62. Some traders even highlight a bullish cup and handle formation, suggesting XRP could surge as high as $5.80 if it breaks above $3.80. Still, the risk of a deeper correction lingers. A clean drop below $2.95 could open the door toward $2.40, aligning with heavy trading levels from 2020-21 and the 200-day EMA. For now, all eyes are on whether XRP can reclaim $3 as support and reignite its rally.
If a group of people can create an institution to issue money, right? And they call it the Federal Reserve, even though it's not federal, or it's not part of the government. And it's not a reserve in the sense that unlike a bank, which has deposits, there's nothing there. So what is it? Well, it's a mechanism for stealing wealth, right, through the process of inflation, which they propagandize to make us believe it's good for us somehow. And I say, how is it that something that's engineered to take half my purchasing power every generation a good thing? I mean, there's just on no planet is that good. So, but we've been propagandized to believe that somehow these guys have our and it's guys, right? There was a bunch of old men, and they did it. And so now we have this liberating, because I love the liberty word as well. We have this liberating technology that allows us to fight back. And I keep going back all the time to, and again, I could never really understand this because I'm not that, right? I mean, what I mean is Wences Casares grew up in Argentina, and he watched, and he speaks passionately about this, he watched his family lose everything 3 times, right? They built up a fortune. The government took it away by devaluing the currency. They built the fortune back up. The government took it away.
If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoin Zella for daily news, all for free. That's all for today's video. Until next time.